All right, guys, welcome back to Roxham TV. I'm your host, Jeremy. We've got a lot to unpack today because both the stock market and crypto market are under pressure. Bitcoin is getting hit again, altcoins are bleeding, and some investors are starting to ask whether this is just a healthy correction or the beginning of something bigger. We will start with Wall Street. After one of the strongest rallies in years, semiconductor stocks are suddenly getting crushed. Broadcom disappointed investors, chip stocks sold off, and some analysts are now warning that the US stocks might be entering bubble territory. We'll look at why some market analysts believe a major correction could be coming and what investors should watch next. Then we'll jump into Bitcoin. Even though the price has been falling, Washington is still moving forward with Bitcoin legislation. We'll talk about the latest updates on the Strategic Bitcoin Reserve, the Clarity Act, and why some Bitcoin bulls believe the policy story is becoming more important than the short term price action. And speaking of crypto, one of the strongest performing altcoins of this cycle just got absolutely wrecked. Zcash crashed nearly 40% after a critical vulnerability was discovered. But what's really fascinating is how the bug was found. According to reports, Anthropic's new latest AI model, so Claude Opus 4.8, helped researchers uncover a flaw that had gone unnoticed for almost 4 years. This might be one of the major examples of AI discovering a serious vulnerability inside a living, alive crypto protocol. And honestly, I think the story is much bigger than Zcash itself. Then we'll talk about SpaceX. The company is preparing for one of the biggest IPOs in history. More than 1,000 employees are reportedly organizing together to negotiate better deals with banks before becoming overnight millionaires. But here's the big question. At a valuation approaching $1.8 trillion, is SpaceX actually worth that much? Or is this just another example of investors getting caught up in hype? We'll also discuss two AI stories that caught my attention today. So first, we have Stanford study found that law professors actually prefer AI-generated answers 75% of the time when they didn't know who wrote them. So, if AI can already explain legal concepts much better than many professors, what exactly are students paying for? And what does that mean for the future of education? And finally, we'll look at a major legal controversy in the United States involving the Southern Poverty Law Center. Federal prosecutors have filed serious charges against the organization, and the case is already sparking a much bigger debate about activism, informants, and where the line should be drawn. So we've got a lot to talk about. So we will start with the market. We've got Bitcoin, of course AI, we've got SpaceX, and of course let's just jump in straight into it. And let's start with Wall Street because after months of non-stop gains, investors are finally hitting the bricks. So, Wall Street, what's happening here is that, as I mentioned, after one of the strongest stock market rallies in years, Wall Street is looks like having some breather. I have to stop a little bit. So, U.S. stock future. So we quickly hop onto the S&P 500. Well, it still looks like an up only, but like one of the daily candle, which happened on 3rd of June, that scares a lot of people. But anyway, so US stock futures moved lower this morning as investors started selling semiconductor stocks following disappointing results from Broadcom. So we have to talk about Broadcom. So S&P 500 future were down around 0.4%, while Nasdaq futures fell more than 1%. And the biggest loser, as I mentioned, is Broadcom. The stock dropped as much as, well, wait for it, so as much as 15%, so according to, again, based on the time frame you're looking at, but it actually fell off the cliff. So a lot of basically it scared the market quite a lot. So at first glance, like let's go back to what happened to Broadcom. Why investors are dumping Broadcom right now? So actually not bad, but that came in slightly below what Wall Street was expecting. More importantly, is infrastructure business, like one of the key areas tied to AI spending, also missed expectations, and that's what investors focused on. Remember, AI stocks have been one of the hottest trades in the market for the last 2 years. When expectations get very high, companies don't just need good results, they need exceptional results. And Broadcom didn't deliver that this quarter. And AI stocks, so not only Broadcom is getting hit, like the entire AI stocks are also taking a hit, like other major chip companies also fell in pre-market trading. So for example, ARM dropped 6%, Micron fell around 6%, and the FanX Semiconductor ETF, which tracks the chip sector, fell more than 3%. This is again a good reminder that AI remains a very powerful trend, but even the strongest sectors don't move up forever without taking a break. At the same time, so we go back to the stock market. At the same time, we know that geopolitical tension is very real. Investors are still dealing with growing uncertainty in the Middle East. Tensions between the United States and Iran continue to create volatility across global markets. We have seen sharp moves in oil prices. We have seen treasury yields moving around, and investors are becoming a little more cautious when it comes to risk assets. When geopolitical tension rise, traders often reduce risk until they have more clarity. And not to mention, there was some fresh data, so fresh economic data as well. So new jobless claims came in around 225,000. That is the highest level in almost 4 months. Now, this doesn't mean the economy is falling apart, but it does suggest that the labor market might be cooling down a little bit. And that's another reason why investors are becoming more careful right now. And before anyone starts calling that this is probably the end of the bull run for stock market, so we're not talking about Bitcoin or crypto right now, but stock market, it is actually important to zoom out. So the S&P 500 recently just hit new all-time high. So literally just a few days ago, the market just came off like a 9-week winning strike, and that is a huge run. So personally, I'm not like very concerning, but again, since it doesn't show a that the stock market is taking a longer break, because arguably speaking, we haven't seen such a longer break since 2008, and that is definitely very concerning, because if we zoom all the way out, again, we are looking at the weekly chart, like the basically a longer bear market was 2028. Like the COVID one, it was nothing because there was a huge V-shaped recovery. So this also raised a lot of questions about the S&P 500 and the US stock market as a whole. Like, when are we going to see a actual bear market? Is it too crazy right now that the fact the S&P 500 never goes down? So this leads to another a very critical question we have to ask, like, could a massive stock market correction be coming? And a warning is making the rounds on Wall Street this week. So we have to talk about this report coming out from Seeking Alpha. So there is some analysts believe that the U.S. stocks could be heading toward a major correction, and the reason comes down to three things. So the first one is valuation, and then we have inflation, and then the Federal Reserve, of course. We are going to break down his reasoning, like why would he think that there might be a huge correction to come in the traditional US stocks market. So we're going to break down the reason one by one. So the first reason he claimed is that the S&P 500 is once again trading near all-time highs. Like, most of the gains have been driven by technology stocks, especially AI-related companies. Since the Iran conflict began a few months ago, the S&P 500 actually has gained around 10%. So that's how deviate the market has been. Like there's a horrible event, yet the stock market is breaking new all-time high. But technology stocks have surged even more. So a lot of the majority of the S&P 500 is consist of tech stocks, and think about it, and tech stocks have surged even more. That's how crazy the whole situation has become. Like some AI and semiconductor names have jumped more than 30%. So the concern is that investors have become extremely optimistic. According to the analysts, stock valuation are now approaching levels last seen during the dot-com bubble. So here is another chart that people like to use. This is kind of correlate with what Michael Berry has been saying for this year or past year as well. So what happened is that back in the year 2000, investors were paying huge prices based on future growth. Today, think about it as kind of similar. Like investors are paying huge prices based on a current profit, but the end result might look very similar, like a market that has been too expensive right now. So is the AI boom becoming a bubble? Like the analyst argues that much of today's market rally is tied to AI spending instead. So big tech companies have poured hundreds of billions of dollars into AI infrastructure. So whether it's data centers, chips, servers, cloud computing, companies like Nvidia or Broadcom, AMD, and others have been basically benefiting from this scenario. But here's the question: like, can this spending continue forever? Probably not. At some point, companies might slow down the AI investment, and if that happens, many of the stocks leading this rally could face some serious pressure. The comparison being made is quite simple. So, in the year 2000, it was internet spending, and right now in 2026, it might be AI spending. So that's reason number one. And reason number two, it actually tied back to the whole geopolitical tension around the world. So the analysts here say the biggest threat isn't AI, but is inflation. So specifically energy prices. The concern is that tensions evolving around could disrupt global oil supplies. If oil price rise sharply, inflation could come back to the United States, and that's a problem for markets because higher inflation often leads to higher interest rates, and higher interest rates tend to hurt the stock market, especially expensive growth stocks. And reason number three that he mentioned in his article, it has something to do with the Federal Reserves, and this one is interesting. So for most of this year, investors have been expecting lower interest rates, but some traders are now starting to price in the possibility of rate hikes instead. If inflation rises because of higher oil prices, the Federal Reserve might have no choice. They could become more hawkish, meaning they might keep rates higher for longer or even raise rates yet again. If that happens, investors might suddenly rethink today's high stock valuations. So this goes back to the stock market, like why are we paying attention here, right? Now, let's be clear. This is just one analyst's opinion. Like nobody knows exactly what the market will do next. But the warning highlights something important. Right now, stocks are pricing in a very positive future. There's strong AI growth, lower inflation, lower rates, and steady economic growth. The problem is that markets don't need all of those things to go wrong. Like they just need one of them to disappoint. So if AI spending slows, if oil prices spike, or if the Fed turns more hawkish yet again, we could see a much bigger pullback than many investors expect. Like by then, might be maybe Michael Berry turns out to be right again because that's what he did back in the year 2008. So the key takeaway is simple. Markets are expensive, expectations are simply too high, and when expectations gets too high, even small surprises can cause big moves, and that's something investors should keep an eye on over the next few months. Anyways, comment in the section below and let me know if you think the stock markets are going too insane. Like, is it healthy to go on a recession or maybe a bear market right now? Do let me know what you think. But we are going to take a short break from here. When we come back, we have to talk about a massive IPO on the go. So, SpaceX is ready to go public next week. So, something unusual is happening though. So, the next big wave is not being done by Elon Musk himself. It's actually SpaceX employees because lots of them, they are about to be multi-millionaires and they have a lot of bargaining power to even this time going against the banks. So do stay with us after the break. We're going to give you some interesting details in a bit.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
All right, guys, welcome back to Roxum TV. We now have to talk about a massive IPO on the go because, as we know, SpaceX is getting ready to go public as soon as next week. Something unusual is happening behind the scenes. So, more than 1,000 current and also former SpaceX employees are joining forces to negotiate with banks and basically wealth management firms. The reason why they are doing this is because many of them are about to become extremely wealthy. Together, this group reportedly controls more than $20 billion worth of SpaceX shares. And by negotiating as one large group, they are trying to get much better deals than they could do individually. So it actually makes a lot of sense. So, here's a group they are using the number as leverage. Like normally, wealthy investors would pay banks and advisors around 1% or maybe more each year to manage their money. But these SpaceX employees are shopping around. They are talking to more than 20 banks and advisory firms and pushing fees down to less than 0.5%. So the logic is simple. If you are bringing billions of dollars to a bank, you should have more bargaining power. So right now, let's actually play a clip and look at this together.
Your reporting has found that Elon Musk is negotiating to cut down the fees that bankers normally get paid. What do bankers normally get paid, and what does Elon Musk want to pay them?
Look, if you think about it realistically, in some ways, SpaceX is the Walmart of IPOs, right? It has all the pricing power here. It is raising $75 billion, so you shouldn't expect a typical IPO fee. And to your question, what a typical IPO fee is, most IPOs generally tend to raise less than $1 billion, a few $100 million, and the banks would usually charge between 4 to 7%. But even when we talk about the league of mega IPOs, that fee does get reduced drastically, but even in most of those cases, almost all of those cases, usually about 1%. That was the case with Facebook, Uber, Alibaba. You have to go back perhaps to 2020 and 2010 and a very unusual public listing of General Motors back in 2010 when the banks agreed to a 0.75% fee on that IPO, largely because the owner of GM at the time was the United States government. This is very different, but also look at the quantum of money that SpaceX is trying to raise, $75 billion. So even if they charge one of the lowest or offer one of the lowest IPO fees on record, less than 75 bips, less than 0.75%, that would still amount to somewhere in the ballpark of $500 million. And Paul will tell you that is a pretty good payday for banks.
And you know what? I actually agree to the employees because think about it. They are bringing billions of dollars, like literally billions of dollars, and walk into a bank. Like they should be treated more fairly or maybe more favorably. Well, however, I would say the bigger challenge for this large group of employees not necessarily is the fees of the banks that they are charging, is the taxes. Like many employees own stock options and restricted shares that will become available after the IPO. If they immediately sell those shares, they could face a huge tax bill. So instead, many are looking at strategies that wealthy investors have used for years. One example is borrowing against the stock rather than selling it. That allows them to access cash while continuing to holding that shares. Another strategy is direct indexing or other tax efficient investment tools. These are techniques normally used by hedge funds, by billionaires, and family offices. Now, SpaceX engineers and employees are learning how to use them as well. At the same time, SpaceX has the insane valuation, is finalizing its IPO. The company recently priced shares at $135 each. That gives SpaceX an estimated valuation of $1.77 trillion. So let's quote it $1.8 trillion. So to put that into perspective, SpaceX would immediately become the eighth largest public company in America. So here we have the ranking list, like the world asset around globally. So the first one is of course gold, but if we exclude these precious metal, including gold and silver, that will put SpaceX on number eight. So sitting below Broadcom. So yeah, that would be bigger than most household name companies around the world. But here's the debate, and this is where it gets interesting. So SpaceX is worth nearly $1.8 trillion, but it doesn't make any profit. And its revenue is still much smaller than many companies ranked below it. Like, in fact, by revenue, SpaceX would only rank around 200th among US companies. And that's why some analysts are raising concerns. So Morningstar recently started coverage on SpaceX and gave it a valuation of around $780 billion. That's less than half of the IPO valuation. One analyst even wrote that investors might find better buying opportunities after the IPO. In simple terms, he is saying like don't rush into purchasing the IPO on day one. Maybe wait and see a little bit and. When the stock would pull back, because it makes sense. During IPO, there's usually insane volatility. There's usually a huge spike up and down. So the analyst, I'll actually agree with his opinion. But anyways, like as viewers at home watching this IPO isn't just about SpaceX. It's a test of how much investors are willing to pay for future growth. The company dominates space launches, it has Starlink, it has deep ties to AI, defense, and communication. But at nearly $1.8 trillion, expectations are extremely high. And when expectations get too high, execution becomes everything. So the next few weeks could tell us whether investors believe SpaceX deserves to be one of the most valuable companies on Earth, or whether the market has simply gotten a little too excited. So time will tell. We shall find out next week. So sticking to the AI topic, we have to dive into one interesting news I saw on Reuters. So AI beat law professors in Stanford tutoring study. So one question we have to ask, did AI just beat law professors? There's this new study from Stanford Law School is getting a lot of attention this week. And if you are thinking about spending hundreds of thousands of dollars on a law degree, you might want to hear this out before going forward with that decision. So, researchers recruited 16 law professors from 14 different American law schools. The professors were asked to answer common first year law student questions. These were very basic questions that students often come across, and maybe they were asked after one lecture. At the same time, AI tools were giving the exact same questions. So the professors then reviewed all the questions, but here's the catch. They didn't know which answers came from humans, and they didn't know which answers came from AI. The results were very surprising, though. So, in 75% of the comparisons, the professors preferred the AI answer. So, let me repeat that once again. So, law professors looked at different answers written by other law professors and AI, and three out of 4 times they chose the AI. Like even more surprising is that the human written answers were flagged as harmful to student learning 3 times more than the AI responses. In other words, the professor thought the AI explanations were clearer and more helpful. But just yet, like don't fight the professors yet. Like now, before everyone say university are finished and AI will replace all teachers, there is another study worth looking at. So, researchers from several universities study middle school students learning math. They compare two groups. One group learned with AI tutors only, the other group learned with both AI and human teachers. The result of this, so the students using both AI and humans perform better. And honestly, that makes sense. AI can explain things much quicker. AI is available 24 hours a day, but humans still provide that motivation, that guidance and feedback and emotional support. And not to mention, like AI is still doing really bad math right now. So when it comes to math, just don't rely on AI. The best result came from like combining both of them. So I would say it's not an apple to apple comparison when it comes to the law degree here. But the real question is about the value. Like here's where things get interesting. So when it comes to law school, like the average law school in America costs around 50K to 70K per year. Some of the top schools cost much more than that. Students often graduate with massive debt. And one of the main reasons people pay for those prices is because they believe they are getting access to expert professors. But if a $10 per month AI tool can answer my questions and answer many questions better than professors, then what exactly are students paying for? In other words, speaking, what are universities really selling? To answer that question, I would say there are two answers. So the first one is credentials. So a law degree still carries weight whether you like it or not. Like it tells employers, clients, banks, and society that you have completed a very difficult program, whether that's fair or not. Those credentials still matter in this day and age. The second answer is networking, and honestly, and I think that is a bigger deal here, not just like the certificate. Like university is one of few places where ambitious people meet other ambitious people. Like there are future lawyers meet future lawyers, future entrepreneurs and meet future entrepreneurs, and future business partners become business partner at the end. So those relationships can actually last lifetime. So in my opinion, this is what I see the value of university. Like if I have kids in the future, this is what I see the value, but I'll definitely avoid a law degree for sure. Like I don't think the future is AI replacing education. I think the future is AI changing education. AI is making knowledge cheaper than ever. Information is becoming almost free, but human relationships, mentorship, and community, they are still very valuable. The old model of paying huge amounts of money just to access information is probably dying. That's not the point of majority of wealthy people sending kids to university these days anyway. But the idea of learning together and building networks, that isn't going away anytime soon, I'm afraid. The education system will change, but it probably won't become AI only. The winners will likely be the schools and teachers that learn how to use and work with AI instead of competing against it. Let me know if you are with me or disagree with me. So do share your thoughts in the comment section below. But we have to basically shift gear and hop on to the next topic of today. So right now there is a major legal case and it's making headlines in the United States. So this is now basically a group called wait for it. What's the name of the group again? So SPLC. So a group stands for Southern Poverty Law Center, SPLC. They are facing federal charges. So the organization is well known for tracking hate groups and very extreme organizations across America. Now there's organizations and wait for it, and even the Ku Klux Klan groups. The government said some of these payments happened between 2014 and 2023. Prosecutors claim millions of dollars were involved. They also claim some payments were hidden through complicated financial structures. And we have an investigative journalist, his name is Tyler O'Neill, has been following the story very closely. He recently actually spoke about the case before Congress. So let's actually play a clip and let's look at this together.
Chairman Jordan, Ranking Member Raskin, members of the committee, I'm honored to testify before you today. I will argue that the Southern Poverty Law Center does not merely track hate, it systematically inflates it, profits from it, and, according to a federal indictment, may even have helped create it. The first thing to know about the SPLC is that it has nothing to do with poverty. The Poverty Palace has an endowment, has assets of $822 million. That's more than 3 times the assets of the National YMCA and almost twice the sum of Planned Parenthood. That's why former employees have suggested mocking mottos for the SPLC, such as making hate pay. How did the SPLC become so wealthy? Co-founder Morris Dees set up a lucrative fundraising engine by suing the Ku Klux Klan into bankruptcy. When the SPLC ran out of grand dragons to slay, the center needed to find more hate to justify the fundraising. It has a financial incentive to juice the numbers.
Right, just to break it down more simply, the government's argument is quite simple. So, prosecutors say the SPLC was supposed to monitor extremist groups. Instead, they claim some of that money ended up helping people who remained active inside those groups. According to the allegations, some individuals continued attending those rallies. Some allegedly helped organize events. Others reportedly stay involved in recruiting members. The government argues this crossed a line. They say the organization went beyond observing those groups. They claim it might actually help support them financially speaking. Because of that, federal prosecutors have filed several charges. These include fraud related charges and money laundering related charges. The government is also seeking to seize assets connected to the case. Of course, the response of the group, SPLC, was strongly denying all the accusations from the US government. The organization say these individuals were confidential informants. They say the goal was to gather information on dangerous groups. The SPLC argues the program helped improve public safety. The organization says it did nothing illegal and it plans to fight the charges in court. Well, this matters because it of course attract a lot of attention, not just because of the organizations involved here, but because it raises a bigger question. How far should groups go when trying to monitor extremists? If you pay someone to get the information from inside a dangerous group, where is that line? At what point does monitoring become supporting? That is what courts will have to evaluate and have to decide. For now, these are allegations. No one has been found guilty yet. The government must prove its case in court, and the SPLC will have a chance to defend itself. But one thing is certain: a group that spent years tracking extremism is now facing some very serious questions itself. So that is the irony of the United States or most governments around the world. Anyways, we'll take a short break from here. When we come back, we are diving our tools into Bitcoin. So we know Bitcoin has been falling right now towards 60K. This morning when I check, of course, it's heartbreaking for a lot of Bitcoin investors out there. But one thing for sure is that Washington still wants BTC despite it's falling so much. So if you want the details, make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
All right, guys, welcome back to Roxum TV, and thanks for sticking around with us after the break. We now have to talk about Bitcoin. Bitcoin might be falling right now. The price has pulled back quite hard over the past few days. But in Washington, the conversation around Bitcoin is actually moving forward. So, Treasury Secretary Scott Bessent said the Trump administration is continuing to work on its digital asset agenda, including plans related to a strategic Bitcoin reserve. So, let's actually play a clip and see what he said in the video.
I couldn't agree more with you that economic security is national security. I gave a speech at the Reagan Library outlining my thoughts on that and how for 25 years the U.S. has been asleep, and under President Trump's leadership, we are moving forward very quickly on that. And part of that is our digital assets initiative. The strategic Bitcoin reserve is something this is new technology. This is new ground. We are proceeding with all deliberate speed, and we are making sure that as we are doing this, in this complicated process, that we use best practices and things will be durable for the future. And I look forward to working with you and your team on that.
Absolutely.
And I look forward to the Clarity Act being passed this summer.
Now, this is important. While traders are focused on today's price action, lawmakers are focused on something much bigger. Last month, we also have a congressman, so he introduced a new bill called the American Reserve Modernization Act, or ARMA. The goal here is quite simple. So, turn President Trump's strategic Bitcoin reserve proposal into actual law and create a long-term framework for how the US government manages its Bitcoin holdings. And here's something many people don't realize. The US government already owns a lot of Bitcoin. We are talking about roughly 328,000 BTC, mostly acquired through criminal seizures and asset forfeitures over the years. That makes the United States the largest known government holder of Bitcoin in the world. At the same time, lawmakers are also working on Clarity Act. This bill is designed to create clearer rules for the crypto industry. One of the biggest problems in crypto over the past few years has been regulatory uncertainty. So companies didn't know whether the SEC or CFTC was in charge. Investors didn't know what rules applied, and businesses often had to operate in a legal gray area, or possibly outside the United States. Now, the Clarity Act has officially been placed on the Senate legislative calendar, which means the process is moving forward. And Scott Basson said he is quite optimistic about getting the legislation passed. Well, this matters, and that's why everyone is paying attention. And especially that Bitcoin's price can move up or down 5%, 10%, or 20% in very short amounts of time. That's very normal. But government policy moves really slow. And when governments start changing laws or building reserves, creating that long term framework, those decisions can affect markets for years. So while traders are focused on today's price, why Bitcoin is crashing, policymakers are still deciding and discussing Bitcoin at the highest level of government. That is a very different conversation from what we were seeing just a few years ago. Whether you're bullish or bearish in the short term, it's hard to ignore the direction of travel. Washington appears to be moving toward more Bitcoin adoption, not less. And for long term Bitcoin holders, that's probably the bigger story we should focus. All right, so that's the update for Bitcoin. We have to talk about crypto right now. So, one very interesting dynamic that basically developed this week is that we have to talk about Zcash. And a lot of people were chasing the high because Zcash, if we zoom out to its past year performance, it actually did really, really well. So in just 1 year, we were trading at like $38 and all the way to $700. That is some crazy, very, very crazy return. So 18x, 18x is just like under a year. So a lot of hype, and people were so optimistic because there aren't a lot of altcoins doing too well during this market condition, and given that Bitcoin is still in a bear market. But one of the biggest stories in crypto today is because like Zcash crashed. So if we zoom out to what happened, 1 month is quite obvious as well. It fell off the cliff. And this is surprising because Zcash has been one of the strongest performing altcoins in the market. So the second one we cover a lot is Hyperliquid as well. But like this one, it hurts a lot of investors. So while Bitcoin has struggled and many altcoins remain far below its all-time high, Zcash was considered one of the exception, and it made a lot of people happy. So 18x, 818x in just under a year time. But like this week, it crashed from $700 to right now $300. So that is like more than 40% drop. So right now, the question is like everyone is asking, why this happened to Zcash? What happened this week? So, according to reports, a security researcher discovered a major vulnerability inside Zcash. And here's the crazy part. The bug was reportedly discovered using Anthropic newest AI model, so Claude Opus 4.8. The model was released only days ago, and within days, it helped uncover a flaw that had been hiding inside Zcash for almost 4 years. So we let that sink in. A vulnerability that human auditors missed for 4 years, an AI model somehow helped to find that in days. So, question: what was the vulnerability, and why is the market panic and sold all the Zcash? So this is where it gets a little bit technical, but I'll simplify it for us. So Zcash uses something called serial knowledge proofs. This is the technology that allows users to send private transactions without revealing the wallet address or any information. The bug was found inside Zcash's latest privacy system. So this system is called Orchard. So according to the researchers, the flaw could have allowed someone to create fake Zcash, so fake Zcash token being the ZEC token inside the privacy pool. In testing, they were reportedly able to generate unlimited amount of the fake ZEC token. If the attack worked on the live network, it could have been a disaster. The good news is that the bug was discovered before anyone publicly exploited it. So we have to give some credit to the Zcash team for sure because they reacted really fast. The vulnerability was reportedly privately. Developers immediately coordinated with miners and exchanges. First, they temporarily disabled the affected system. Then they pushed out a network upgrade. The entire process only took around 5 days. So in crypto, that is very impressive. Like many projects would take weeks or even months to respond to serious vulnerabilities. But here's the bigger problem. Like the real issue isn't just the bug. The real issue for Zcash, if you ask me, is privacy. Because Zcash is designed to hide transaction data. It's designed to be private. Like nobody can say with like 100% certainty whether this bug was exploited before it was discovered. There was no evidence that it was used, but because of the privacy design, there is also no way to completely prove that it wasn't. And that's making investors very, very nervous. And that's why if we go back to the price action of Zcash, it dumped from 700 to 300 in a very short amount of time. So market have a strong reaction, and that's fair, right? Like part of this sell-off is probably emotional, like when investors see words like this. So if we go back to the post, so see words like unlimited minting of the ZEC token and critical vulnerability, 4-year bug, people of course panic, especially after a huge rally. Remember, Zcash was already up massively over the past year. And when a market is crowded and everyone's so bullish, bad news can hit much harder. And that's exactly what we're seeing in today's chart. For me, though, I think the more interesting part is in Zcash having this vulnerability and the team is working extremely hard to try to solve them. For me, the reason why I find it interesting is that they use AI to find the vulnerability. This might be one of the first major examples of a cutting-edge AI model helping discover a critical vulnerability inside a major crypto protocol, and that changes everything. Because AI doesn't care if your code base has 1,000 lines or 1 million lines. It can review massive amounts of code much faster than humans. And the scary part is the same AI tools that help defenders find bugs can also help attackers to find them. So this story isn't about Zcash. It's actually about the future of cybersecurity. AI is becoming powerful enough to audit software, to find vulnerabilities, write exploit code, and potentially attack systems. Today, it might be Zcash. Tomorrow, think about it, it could be the banks, it could be governments, stock exchanges, or critical infrastructure. The good news is that AI can also help developers fix problems faster than ever. But one thing is becoming clear. The age of AI assisted hacking and AI assisted security has officially arrived, and crypto might have just gotten its first real taste of it. All right, so I guess in this day and age, we have to live with AI and learn how to use it to our benefit. But anyways, that's pretty much mark the end of today's live stream. So before you go, a quick shout out. So do give us a follow on X. So my X is championcrypto_IO. Make sure to follow Roxham TV as well, because we have regular news coming out on a hourly basis, covering Bitcoin, AI, macroeconomics, economy. So point being, there is so much valuable content you probably do not want to miss out. And we have prominent guests joining our shows on a regular basis just to offer their perspective. So do give us a follow. As always, my show is Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded versions are also available on both channels. So being Jam Crypto YouTube channel and also Roxham TV YouTube channel. So thank you guys for watching. I hope you guys have a fantastic weekend and see you guys in next week's show.